Okay, well, let's get cracking. So once again, a very warm welcome to everyone joining. We've got hundreds of people, predominantly from Nigeria, joining today. I see there's lots of customers that have joined, and lots of new people. So very warm welcome to everyone, and also some people from other parts of Africa. So a big welcome to you. I'll try and make the webinar, albeit it is quite specifically targeted for our Nigerian clients. I'll try and make it as relevant to everyone. So in terms of what we're going to cover today, just wanted to recap on the key discussion points. So what I'm aiming to do, these are a lot of the questions that we often get from our customers in Nigeria specifically, where we've got hundreds of customers now. Is now a good time to be investing in the UK property market? Can Nigerian residents easily invest in the UK property? Can you use Nigerian Naira to purchase UK property? Can Nigerian residents qualify for UK mortgages to help fund the property purchase? How much money can you make in GBP terms to help hedge against the depreciating Naira? And can I purchase a UK property for my child to use whilst they're studying in the UK? So there's quite a few points there. So what I'm looking to do is condense those into three main discussion points, and address all of those questions there as we go through the webinar. Before I do that, if I can maybe just give a bit of background on myself. So I'm one of the co-founders of the RPA group. I'm a qualified chartered surveyor by background, qualified in 2008, so quite a long time ago. And I've got over 20 years of property investment experience. And my main speciality is assisting clients predominantly in the Africa region and helping them to build global property portfolios, currently with a particular focus on the UK market. By way of some background of the RPA group, for those of you who are not so familiar with our company, so fundamentally, what we're focused on doing is helping clients anywhere in the world invest into direct residential property, primarily in the UK market currently, because that's where we see the best opportunities. We're helping clients to invest in UK property in the most effective and efficient way, with a strategy that is designed to optimize the return on investment. And there's a number of key sort of unique selling points to our business. Firstly, the founders of the business, Richard Bradstock, Giles Ledbetter, and myself, we all have over 20 years plus of property investment experience, and we draw on that knowledge every day to ensure that any products that we bring and present to our clients have been through a robust due diligence process, and that they represent best value for our clients, and that we know that they will outperform the wider market in terms of the returns that they will generate. We very much focus on new build properties, so both off plan with a build period, maybe 12, 24 months off plan, but also completed properties. There's a number of other points which I'll come on to in terms of mortgages and lettings and management services, which we also provide a bit later in the presentation. But a few other key points to highlight there. We have direct relationships with developers. It's really important. We're not a sub-agent. We have a direct relationship with developers. Why is that important? It means we have full control of the product, and it means there's no tiers of other people involved, because naturally that means more fees, and that diminishes the value of the property that our clients get access to. And we are very, very much focused on providing the best possible customer service, and we hold ourselves fully accountable to our customers. Okay, so going into discussion point one. So timing. Why is now a good time to be investing in the UK property? It's a very sort of relevant question, I suppose, right now. What's happening in the world? We've got inflation sort of coming under control, but had spiraled out of control. We've got the Ukraine war, which was one of the main catalysts behind that, along with post-COVID supply chain issues as well, I suppose. That's caused central banks around the world to increase interest rates to try and curb inflation. And you know, a lot of those factors have contributed to a far more difficult investment environment, not just for retail investors, but big banks. We've got Swiss banks buying out other Swiss banks to help stabilize, the global economy. So it's a very relevant question, I suppose. Why should we be looking at UK property right now, and why is it a good time to be investing and purchasing UK property? To answer that question, I think let's first look at why one purchases UK property in the first instance. So we know the UK as an economy, it's very robust. It continuously performs. It has a very safe and sound legal structure that offers a lot of protection for businesses, but also for property investors. Regardless of interest rates having gone up recently, we are still in historically a low interest rate environment. And certainly the interest rates available on mortgages, which we can get mortgages for our Nigerian customers. That was one of the other questions. The rates we can achieve here locally are still obviously significantly less than mortgage rates available in Nigeria and any other part of Africa for that matter. That's if you can get finance. In addition to those points, the UK has a world-class education system. Probably a good opportunity to cover the other point. Can you purchase a property in the UK when your child is studying in the UK for them to live in? Yes, absolutely you can. We can assist you with that. We've done it many times before. What we can often find is for some clients, once we've been through the different options, we decide that maybe purchasing a property for pure investment purposes makes a bit more sense. It generates higher returns, and then the profit and the income you generate from that property investment, you can use that to offset the cost of renting accommodation for your child at their universities. But anyway, that's a topic we can take offline. Also other points that really make the UK very, very safe and sound for investment: the infrastructure, it's world class, the airports, new railway lines going up. We've got a very, very strong population growth. We're still a massively undersupplied property market. There's not enough property to cater for the needs of domestic owner-occupiers, and simple laws of economics, that's still creating a very favourable environment for UK property in terms of rental growth in particular, but also capital appreciation. So in addition to why we like the UK and why we like UK property, I just wanted to share this fairly colourful chart with you. So what this shows here is five different asset classes and inflation. We've got housing, gilts, gold, shares, and inflation and cash. The grey one is UK housing. And in summary, what this chart shows, and we will share the presentation slides after the webinar for your reference, but what it shows in summary is over the last 50 years, I've reduced the chart to 1997, but it goes back 50 years. 6 times only has the UK property been the worst performing asset class. Only 2 times in the last 25 years has it been the worst performing asset class. 19 out of the last 25 years it beat inflation. 43 out of 50 years we've seen positive growth, and on average over the last 10 years UK property has achieved on average 5.5% growth per year. So very much a robust, safe, sound place to put your money in times of uncertainty, one would say. And then here finally, just in terms of what's relevant to the UK property market, this is a chart going back to 1967, and the old adage really, if you buy UK property and you buy well and you hold it, you will make money. And you can see there, you go back to 1967, you could buy the average UK property price for a few £1,000s, and now almost up to £300,000 for the average price of a UK property. And typically if you buy UK property and you hold it well for any sort of 10-15 year period, you will typically double your money. So hopefully that goes some way to answering the question, is now a good time to buy UK property? I suppose in summary, you need to buy well, you need to buy in the right locations, and you need to be taking a medium to long-term investment view. If you do that, then you'll make money from UK property regardless of what time you buy. So a couple of the markets that we're currently investing in: London, We're forecast growth there for the next 5 years, 23.5%. Brighton and Hove, fantastic market. London by the Sea, as it's often known, 24% growth over the next 5 years. And then Birmingham, the second largest city in the United Kingdom, fastest growing city, also expecting 24% growth there over the next 5 years. So I suppose what we're showing there is we are targeting markets where we are expecting to massively outperform the UK property market, global property market for that matter. And by buying well in those locations, we will make money. Okay, so the next slide, very mindful, it's been a challenging time, shall we say, for a lot of our Nigerian customers and a lot of my Nigerian friends as they have become, in terms of the elections recently, the local currency, trying to change the currency, cash running out. But there's no escaping the matter that when we look at Nigerian Naira compared to even any other African currencies, it creates quite a bleak picture. And I've highlighted there Nigerian Naira. In 1992, $1 was worth 17 Naira. Today, this is a couple of weeks old, 460 Naira to the dollar. That's averaging over the last 30 years, on average, an 11.5% depreciation per year. So in very layman terms, if you had Nigerian assets and you did nothing with them over the last 10 years, in global terms, in USD terms, your assets have halved in value. So when we're looking at purchasing UK property, we're not just looking at how to make money, we're looking at capital preservation, protecting your assets, diversifying, getting exposure to tier one currency baskets, tier one economies, and safeguarding the value of your portfolio for your retirement planning, but also for the succession planning for your children. Okay, so hopefully discussion point one covered some of the topics that were in the agenda. Now let's have a look at discussion point two. How can Nigerian investors purchase and benefit from owning UK property? So quite simply, this is what we are set up as a business to do. In terms of the RPA business model, we provide an end-to-end turnkey solution for clients globally, but especially for our Nigerian clients, to invest safely, effectively, and efficiently into the UK property market. So our business model, very much at the front end, is focused on the research and the due diligence to secure the assets, because that is by far and away the most important part of any investment. Making sure we're working with the best developers in market, who are well capitalized, who deliver a very, very strong product that we know is in the right location that will invariably outperform the wider market. Once we tick that box, then we very much get onto the investment advisory side. So sitting down with our clients, everyone on this call, for example, and understanding your personal financial circumstances, your investment horizons, your investment goals, and helping you design an investment strategy and securing the right property to meet your investment needs. Once that's been achieved, once we've got your 1 or 2 bed apartment in London, Birmingham, Brighton, or wherever it may be, and we've fully secured that for you, we would instruct the solicitors and we would facilitate the legal process. So you don't need to leave Nigeria. You can do it from the comfort of your living room, should you so wish. And everything is done remotely in terms of the UK solicitors. There's no restrictions on Nigerian clients buying UK property. So that's probably another question on people's minds. Mortgages, we've successfully secured mortgages for hundreds of our Nigerian clients over the years, with some UK lenders, some offshore lenders, and that's something that we specialise in, either directly with the lenders or through our network of mortgage brokers. And that is very specific to individual clients. And of course, that is, again, a discussion that should and can be taken offline. And then at the back end, once we've, the property is completed, maybe in a year or two, We provide a full lettings and management service, so we will manage the property for you. You don't need to be involved in that. We do everything for you. We collect the rent, pay it into your allocated bank account, and then 5-10 years later down the line, should you wish to sell the property or refinance the property, we're there to help you manage that process also in terms of selling it back into the secondary market. So hope that answered the question in terms of, you know, how can Nigerian investors invest and benefit from UK property? The answer is quite simply, that is what we specialize in, and we can help you to achieve that. And our end-to-end model very much facilitates that whole process for you. So the final discussion point is what returns one can expect to generate from UK property investment, obviously in GBP terms. So to answer this question, what I would like to do is to show you an example of one of our current investments, and hopefully that will change my screen. There you go, it worked. This is a new development of ours in Birmingham called Tyndall Court. Fantastic new build and part old heritage building development in the heart of the Jewellery Quarter in Birmingham. Beautiful development, boutique, 53 units, 1 and 2 bed apartments, with a developer who we know and trust and have worked with for many years because they deliver such a fantastic product, King's Crescent Homes. Just a few images there to make it a bit, to build a slightly clearer picture. In summary, as I mentioned, 53 units, 1 and 2 bed apartments. It's a 21-month build period, so we're looking at completion at the end of next year, end of 2024. 1 bed unit starting at 220,000 and the 2 bed starting at 295. We've got 2 models we can implement here in terms of rentals. So we can do the traditional long-term rentals, which is an AST, an assured short hold tenancy, which will give you a rental yield of around sort of 5-6%. Or we can implement short-term rentals, Airbnb, Booking.com, which can really drive up the yields up to around 12%, and therein massively enhance your return on investment. So there's no right or wrong way to let a property, but we do have both of those options available to our clients. In terms of how the purchasing process works, and don't worry, I will answer the question in terms of returns on the next slide, but in terms of how the purchasing process works, once we've sat down and gone over your investment requirements, and let's say we've found you a 1 bed unit in Tyndall Court, to secure that unit, it's a £2,000 reservation fee. Solicitors then instructed, when you exchange contracts, you would then pay a 20% deposit. So on a £220,000 1 bed, that would be £44,000 on the exchange of the contract, typically 28 days from today, from the point of reservation. Then you don't do anything else for the next 2 years almost, and then only on the completion would you look to outlay the balance of probably 20%, and then we get a mortgage for you to cover 60%. So that's how it works. You don't need to outlay all of the money now to secure an investment like this. It's very much an initial 20% deposit, secure the investment, give you exposure to the UK property market from day one, and then the balance is payable 2 years later when the development completes. So let's just go into that in a little bit more detail. This slide may have been more useful for my previous explanation. If you look in the top left-hand side, this is a 1 bed unit, £525,000, 525 square feet, sorry, £250,000 is the purchase price. If we look under the payment terms, as I just mentioned, £2,000 reservation fee for this unit, because it's £250,000. You're looking at an initial deposit of £50,700. That includes your legal fees. And then on completion, we're looking at here a 65% mortgage. So you put in another 15% plus your completion cost. So that's, let's call it £58,000 in 2 years from now, which would equate to total equity of £110,000. So that's your initial reservation fee, your 20% deposit on exchange, and then the balance on completion in 2 years from now. Let's have a look at the top right-hand side. This shows you the net rental income you would generate on a 65% loan-to-value mortgage per year on a traditional 12, 24-month tenancy. Your net rent in your bank account would be £2,420. 5-year return on equity, so that is a culmination of your rental profit and the capital value increase of the property. So over a 5-year hold, we're looking at an overall return on equity, so a return on £110,000 that you put into the investment, a return on equity of 58%, and a 10-year hold 132%. So I think looking at it quite simply, a 5-year return on investment is probably around £60,000, and a 10-year return on investment is more like £130,000. So not bad in GBP terms. If you look in the bottom right-hand corner, what we can see there is the net annual rental return, £6,847 per year. That is based on a short-term let model. So the short-term let model, where it really becomes rather compelling in a slightly higher interest rate environment, is the net rental income it generates. So we're looking at profit rent of over £6,000 a year, and therein it massively enhances the overall return on investment. So your 5-year return on investment is pushed up to around 80%, 5 years, and your 10-year return on investment is pushed up to about 180%. So on the short-term lets model for this 1-bed unit in Birmingham for £250,000, where you're putting in £110,000, pretty much looking at doubling your money, taking away a £200,000 profit over the next 10 years in summary. So appreciate there's quite a lot of information there. Hopefully I explained it in quite a clear and concise manner. But of course we can take those discussions offline and go over it in a bit more detail. So let's just revisit the key discussion points that we have covered. So why is now a good time to be investing in UK property? Quite simply, because in the volatility that we see out in the world right now, if you buy UK property at any time, but if you buy now, you buy well, you buy with the right company, you partner up with the right people, and you get access to the right product, you will make money over the next 5 to 10 years, and that will obviously help you to hedge against the depreciating Naira and safeguard the value of your investment portfolio in years to come. How can Nigerian investors purchase and benefit from owning UK property? Quite simply, come to us, we can help you do that, and our end-to-end service will enable you to invest in UK property in the most efficient and effective manner, and also in the most hands-off manner. We appreciate our clients are all very busy individuals, and our model is hopefully set up to try and alleviate some of the time that does go into investing in offshore property. And then what returns can we expect to generate from your investment? As I showed you on the previous slide, in GBP terms, 10-year hold, in addition to 100%, whether it's a long-term let or a short-term let. We've got options for everyone, and that is, of course, something we can delve into in a bit more detail. I think I've addressed the key questions. I did touch upon mortgages. We can get mortgages for our Nigerian clients, and we've successfully done so for hundreds of our Nigerian customers over the years. The other one was, can we buy property for your children to live in when they're studying? Yes, absolutely we can. But as mentioned, quite often we find a better strategy is to buy purely for investment purposes, to optimize how hard your money's working for you, and then you can use that profit to offset against the cost of putting them into university halls or wherever it is they may want to be. Because also what we typically find, if we're taking a long-term view on children, we don't quite actually know where they're going to go to university, especially when they're 10, 15 years old. So by just taking a position in the UK property market, getting some GBP exposure and making money from UK property in the short term is often a better strategy to implement, because then that will enable you to have options in the future as and when you know exactly where they are going to study, and then you can make a call how you manage that at that point in time. So if you need help with UK property investment, or you would like to book a one-to-one meeting, or you would simply like to gather some additional information, you would like a copy of this presentation, which you will get automatically anyway, please scan the QR code here. This will connect you directly with my colleague Spencer, who'll be more than happy to assist you, and he will be able to furnish you with any information you require, and of course set up a one-to-one meeting with either Spencer or myself. So if you would like additional information or would like a meeting, please, you can scan that QR code there, and that should take you directly to Spencer. In terms of what we will cover in the meeting, should you wish to have a one-to-one meeting, we will go over any additional questions you may have about the UK property market. I've tried to touch upon some of the most relevant ones, but everyone's got their own questions. So in our meeting, we would cover those more specifically for yourself. We will get a fully comprehensive understanding of your personal circumstances and your investment requirements. And as a result of getting that information, we can then tailor a solution for you, and I will help you, or Spencer will help you, to select the best property investment to help you achieve your personal financial goals. So once again, should you wish to have a one-to-one meeting or get any further information, please click on that code there. Whilst I leave that on the screen, I see there's a few questions that have come in. Let me go through them. So we've got Apostle. Do you have a write-up with everything concerning your real estate? Send it over. Absolutely, we will do that. Okay, we've got Alucci. Can I get a recording of this webinar? Yes, absolutely. We will send that across to you. That should be sent to you following the webinar. What is a realistic mortgage rate for a resident in Nigeria? Very good question, one we deal with every day. Rates have gone up recently. You know, getting 5% for a Nigerian client for UK property is not realistic anymore. We've got to be looking at higher rates, 6.5. You know, it really depends on individual circumstances. What I mean by that is, do you have an existing UK property footprint? Do you have a UK credit footprint? Do you have dual nationality? None of those factors are essential, but they do help. Do you have a UK bank account? You know, all of those will help us to get access to additional lenders, but they're not mandatory. So even if you do not have dual nationality, you're based in Nigeria, fully Naira asset and income based, we can help you secure mortgages in the United Kingdom. What you will probably find is, as a result of that, the rate might be a little bit higher than a Nigerian client that maybe has dual nationality and an existing UK footprint, but we can still get you financing up to conservatively 60-65% loan to value. And then I didn't actually cover, can you use Nigerian Naira to purchase UK property? Yes, you can. I mean, we can work with licensed FX providers who can facilitate that service. And someone has corrected me here. What I've used is the what we call it the official rate. I've got Nigerian Naira 755, not 460. Well, I don't like to refer to it as maybe people do locally, but I would say the official and the unofficial rate. So the official rate I've put there was 460. The unofficial rate, which I do understand how it works. I've been to lovely Lagos and Abuja many a times in my life, I'm pleased to say. And I do know how it works in terms of on-market, off-market exchange rates. But I've literally used the lower rate in this. Unfortunately, the rate's a lot higher at the moment, isn't it? So probably further reinforces the points I've made. So thank you for that question. One final question is, how will I manage my UK property? We will do that for you. That's what we specialise in. So you don't need to come here. and take control of that yourself. The UK lettings and management market is highly regulated, so you need to work with a partner in order to do that for you. I think in the interest of time, I will leave there's about 20 questions there in total. So hopefully I've picked out some of the most relevant ones at the top. And of course, should you wish to continue discussions and have a one-to-one meeting, please do scan that QR code there. And that will enable you to connect directly with Spencer, and he will assist you further from there. So I would just like to say a big thank you to everyone for attending today's webinar. I hope you found it useful. It's been a real pleasure. Yeah, I wish everyone in Nigeria and around Africa, around the world, all the very best. Take care, and we look forward to being in touch in due course. Thank you very much.